You're watching BNN Bloomberg. I'm John Ehrlichman. Well, our top-line story today highlighting Canada's economic challenge. Even before we started talking about COVID-19 as we know it today, we got a GDP reading for the month of February, which showed that the Canadian economy was stalling even before the crisis took hold. Let's get some more perspective on the fiscal challenges for this country right now and the road ahead. John Manley is the former finance minister, former deputy prime minister, former CEO of the Business Council of Canada, and a senior advisor at Bennett Jones. And John, I guess, you know, we're trying to make sense of these numbers. So much has happened since February. It almost feels like, you know, you don't want to pay attention to it. But the new learning we get today is there were already challenges for the Canadian economy heading into COVID-19.
Yeah, I think that's right, John. We were beginning to feel it, but that seems like a century ago right now. We are now experiencing what some have said there's no word in economics for it. It's like a government-mandated shutdown of the whole economy. That's not something we've ever seen before. So the aftermath of this is going to be it's going to be fraught with lots of challenges for governments.
What do you think the biggest challenge will be, John?
Well, you know, it's how are we going to come out of this? What kind of recovery will we have? If you accept that we were already slowing down, and the numbers show that already in the private sector, both business and households were getting a little high on debt, a little over leveraged. That's going to be significantly exacerbated by this downturn. Government programs have put a lot of liquidity into the system, way more than we've ever seen before, even than 2008, 2009 in Canada, when the Bank of Canada didn't expand its balance sheet. This time they've done so massively. So what's the outcome of this? Do we have a classic kind of inflation with too much money out in the system, chasing too few goods and services that are available for purchase? Do we have a U-shaped recovery where it goes very slowly as people gradually get back into their workplaces, gradually become more comfortable with being in public places? Don't know, can't know, won't know until it starts to happen.
And so what does that mean for the federal government, which talked a lot about the fiscal wiggle room that they had coming into COVID-19, and we've seen that fiscal firepower put to use. But I guess if this drags on and we don't have a clear road to recovery, what does that mean? I mean, how much more can you spend?
Well, you can spend as long as you can borrow the money, and that's going to become increasingly problematic. So far, the debt markets have been pretty willing to absorb lots of debt. Bonds are being purchased. Bank of Canada, of course, has been purchasing some of those bonds, which is tantamount to printing the money and putting it out there. And interest rates are remarkably low. What hit the Chrétien government in the early 90s, when I was there, was that interest rates had climbed. And we found ourselves with the interest payment alone consuming about a third, or actually more than a third of it, 37% of our revenue. So for every tax dollar we collected, 37 cents just went to pay interest to bondholders. That's not the case today. There was, in fact, a lot of firepower. It's just a few of us curmudgeons that were not happy about running deficits in good times that worried at all about it. I think we've been proven true. You know, if you try to put money aside for a rainy day, well, we're having a very rainy day. And it would be better had we paid down more of our debt before this started. But that being said, if the economy gets back to something like normal, if supply chains get reestablished, people get back to work, and governments show discipline on their other spending, we should be able to work our way out of this over the next decade.
So we'll see what happens on that front. We had an interesting conversation earlier with one of the economists at Bloomberg Economics who pointed that, obviously one of the wild cards is COVID-19 and whether or not, as we deal with phase one, if we get into the fall or the winter and we're dealing with again and we've got to shut down the economy, that's one wild card. But the other is bridging this gap for businesses, because their analysis shows if you've got a lot more bankruptcies now, that really can stretch out that road towards recovery.
Well, that's right. And if I'm not mistaken, the number of bankruptcies had been beginning to increase before we went into the COVID crisis. So, and as I said, a lot of businesses were over leveraged. So they had too much debt. And if you're in a cash flow business, which most smaller businesses are, you're finding now you've got no cash coming in if it's not from the government. So it's not a good situation to be in. There are some businesses, of course, that have consistent revenue streams regardless. That's why Shopify is now one of the most valuable companies in Canada. They've got a revenue stream. Telecom companies have revenue streams. Banks and insurance companies have revenue streams. But if you're in a business that's in the hospitality sector, the consumer retail sector, you're having a hard time getting the cash flow that you need, and you're basically going into that position that we're taught to take when we're attacked by a bear. Just roll up and don't move. And companies are trying to preserve their cash. How quickly they unfold from that, how quickly people begin to regain their confidence remains to be seen. As I said, we've never been through this before.
No doubt. Hey, John, always good to get your analysis. Thanks very much. That's John Manley, former Deputy Prime Minister, former Finance Minister, a senior advisor